Good morning. As far as the market is concerned, the gains made over the past 1 year or so have been spectacular post the global meltdown. Today promises to be yet another sweet start for the market on the back of good global tidings. The key to watch is whether the Nifty manages to close above 5,350. Equities worldwide have gained after Greece decided to tap into the European Union IMF flow. The initial monsoon forecast is encouraging. Earnings from a couple of big private banks have been pretty robust. On the other hand, Reliance's results were slightly disappointing. As the Mumbai Indians loss to CSK shows, nobody is invincible. So one has to guard against complacency. No need to take undue risks. Wait for a decisive move in the key indices. We expect the market to remain range-bound and sideways ahead of the Fed meet and F&O expiry. FIIs were net buyers of Rs 3.39 billion on Friday on a provisional basis. Local funds were net buyers of Rs 290.9 million according to figures published on the NSE website. In the F&O segment, the foreign funds were net buyers of Rs 3.58 billion. Foreign exchange reserves rose by $61 million to $280 billion for the week ended 16th April. Centre has fixed the fair and remunerative price of sugarcane for ensuing 2010-2011 sugar season at Rs 139 per quintal. Value of 3G spectrum moved up by over 6 billion rupees to close at 76 billion rupees. Cabinet gave its note to infuse Rs 150 billion in public sector banks during 2010-2011 to help them maintain capital requirements and boost their credit growth. Government is likely to increase tax on all forms of iron ore to 20%. IMD forecasts a normal monsoon across the country this year. RBI plans to free interest rates on certain segments of export finance. The government is considering a proposal to ease foreign direct investment rules in the retail sector. Pantaloon Retail says the company will demerge 3 of its business, including that of food, into 2 of its subsidiaries. Coal India expects to seal strategic partnership deals with 3 listed companies abroad within 6 months, including Peabody Energy of the US. Moving on to the recommendations, the derivative strategies are Long Century Textiles Limited April future at Rs 541 for a target price of Rs 555 and a stop loss is to be placed at Rs 530. And Short Sesa Goa Limited April future at Rs 442 for a target price of Rs 425 and a stop loss is to be placed at Rs 449. The technical calls are JP Associates buy. Traders are recommended to buy the stock at current market price of Rs 157 and up to declines of Rs 155 for a target price of Rs 167 and a stop loss is to be placed at Rs 151. And Graphite Industries, traders are recommended to buy the stock at Rs 95.50 for a target price of Rs 104 and a stop loss is to be placed at Rs 91. Thank you and have a great day ahead.